Welcome back. I'm your host, Darnell Jackson. In this crypto report, we're going to be talking about how Michael Saylor lost $299 million for Microstrategies. But before we do, make sure you subscribe to your favorite channel on YouTube, Darnell Jackson Crypto. Shout out to all the subscribers, daily videos. Let's jump over to the agenda. We're talking about how Michael Saylor lost $299 million for MicroStrategy on Bitcoin. I'm going to talk about a tweet, and I'm going to show you a little video of Michael. Before we get to that, I want you to remember we did some coverage on Michael, and we were talking about why Michael Saylor talks crazy on Bitcoin. Make sure you check out that video. It is in the list in here somewhere, but it talks about why Michael Saylor has the perspective that he does. But what I want to do now is let's jump over to one of his tweets. This is from Michael Saylor, the CEO of Microstrategy. He's talking about Microstrategy announces second quarter 2021 financial results. So here's his tweet. Now, whenever a corporation talks about their financial results, anytime they don't include something about with a huge beat on earning projections, anytime they don't include some positivity in the announcement, that's the foreshadow, that's the tell that there is a problem. Let's take a look at the actual official second quarter 2021 financial results. You can get this from Microstrategy website. And I want to read a quote. From Michael Saylor. He's talking about our success in the market is being driven by the investments we have made and the broad adoption of our innovative MicroStrategy platform, said Michael J. Saylor, CEO, Microstrategy Incorporated. He says our success in the market is being driven by the investments we made. Really? Well, let's take a look at those investments, Michael. Okay, so second quarter. Let's go right to the gross profit. No, I'm sorry. We're going right to the net loss. Net loss income. Net loss for the second quarter of 2021 was $299 million or $30.71 per share on a diluted basis, as compared to net income of $34 million or 35 cents per share on a diluted basis. Okay, so they lost a chunk of money. All right. Now, talking about their cash and cash equivalents, as of June 30th, 2021, MicroStrategy had cash and cash equivalents of $56.4 million compared to $59.7 million in December 31st of 2021. This is a decrease of $3 million. So they actually have less cash on hand. Now here's the section that's bringing all the attention. Digital assets. All right. As of June 30th, 2021, the carrying value of MicroStrategy's digital assets, comprised of approximately 105,085 bitcoins, was 2.051 billion, which reflects cumulative impairment losses of 689 million since acquisition, and an average carrying amount per Bitcoin of approximately 19,000. Okay, so they're talking about the non-GAAP digital asset cost basis and non-GAAP calculation of the market value of MicroStrategy's Bitcoin were 2.741 billion and 3.653 billion respectively. which reflects an average cost per Bitcoin of approximately 26,000 and the market price per Bitcoin of 34,000. So apparently they paid at least they had to pay over 26,000 in order to be receiving a loss. And we're going to look at the market. But what I want to do is we're going to jump over to the headlines talking about this story. And here's the biggest article right now on Forbes. This article from Jonathan Ponciano. It's talking about Bitcoin's biggest corporate investor posts a $299 million loss after crypto crash, but the billionaire CEO says he's not backing down. And the facts from this article: in an aftermarket release Thursday, Virginia-based Microstrategy reported a second quarter loss, and it's compared to a $3 million profit in last year's second quarter on approximately $125 million in sales, which were up 13.4% from a year earlier. So think about that. They made 13% more sales and still lost money because of Bitcoin. So that's the reason why they lost. Apparently they did pay more than some people think they did, and this has resulted in a loss. So here's a surprising fact. Last month, MicroStrategy raised a greater than expected $500 million through the sale of bonds in order to acquire more of the world's largest cryptocurrency. In a sign of massive interest from institutional investors, the company received more than $1.5 billion in orders for the offering, which was announced while Bitcoin prices were at a 1-month low of about 33,400. So if they did buy at that time, they would be up based on where prices are today. Let's jump over there and take a look at where Bitcoin is. And if they bought last month, 1 month ago, this is Bitcoin right now at 40,000. 1 month ago, Bitcoin was around 35 on June 30th. The timing is actually perfect for this post. And so they would have made 11% had they purchased on that date. But apparently they paid much more for some Bitcoin previous to that, because they have a substantial loss. So they must have bought some of that Bitcoin back in May for 49,000 or something. What do you think? Post in the comments what you think Michael Saylor paid. Now I'm going to play Michael Saylor in his own words. This is for CNBC International, and he's talking about how China made a mistake by giving up the Bitcoin business. Here's Michael Saylor.
$1 billion in revenue that was doubling every year, and they just turned off the business. They've surrendered the entire Bitcoin mining business to the West, and they also forced all of their Bitcoin holders to sell in a hurry at a major discount. So what you've seen is tens of billions of dollars of Bitcoin transferred from the East to the West at a massive discount, and you're seeing the entire Bitcoin mining business migrating from the East to the West. Once they've done that, I don't think they'll get that back. That's why it's a mistake.
When will that mining migration?
Well, was it a mistake because China sold, and so far, have they lost in that trade?
Stabilized prices, do you think?
I don't think the price, the mining is really driving the price. I think what's driving the price is the crackdown on over-the-counter trading. I think it's more of a capital control the Chinese are putting in place. And so anyone holding Bitcoin had to sell the Bitcoin to convert it back into RMB. I think that rushed, forced exodus of capital is what's driving the price. I think it's got to work its way out of the system, and I think we're getting toward the end of that. We'll see. It might be a little bit more in the system, but once that forced selling is through the system, then I think we're based for advances from that point forward.
Okay, no.
Well, looks like he may have been right. This was published on June 28th. So here we are 1 month later, and Bitcoin has come back 10%. So shout out to Mike. He was right on that piece of what he was saying.
Aside of course, the crackdown in terms of cleaning up the system in China is cracking down on mining activity. And so, to your point, that migration is happening to the US. I wonder how much of that has played out and how much more is there to go for the market to rebase itself.
The network peaked at 180 exahash about a month ago, and it's down to about 100 now. So we've seen about 40% of the network get turned off. I think that it'll take 12 months to try to turn that back on again. But again, the network's perfectly secure. It's very anti-fragile. The mining activity has shifted to North America, Europe, and other parts of the world. What's really happening here is an exodus of capital from China. The miners have to sell Bitcoin in order to finance their exodus. The holders of Bitcoin in China have to sell the Bitcoin. Their financiers are selling the Bitcoin. So it's kind of a forced government-driven liquidation of the asset from the east to the west. Western buyers are getting a bargain. My company bought $489 million worth of Bitcoin, around $37,000 a coin. If this had not happened, we would have had to pay double.
All right, so there you go. He also disclosed about how much they paid for their Bitcoin, which was 37. And so that gives you an idea of where they are in the game. 37. Bitcoin to right now is at 39. It's been close to 40. So if they paid 37, they were around in here in May prices. And that would have gave them a loss when Bitcoin took its dump below 30,000. But they rebounded here recently, so maybe the jury's out. What is your opinion? I would love to hear your thoughts on Michael Saylor's moves. Make sure you check out the latest videos, daily crypto news from Darnell Jackson. Crypto. Shout out to all the subscribers. Thank you for liking the video. If you didn't like the video, watch the other videos until you find one you like. If you don't like none, share one with somebody who will. Until the next time, peace.